Hi there, it's Nick Stewart from Exclusive Hot Properties, and today's video blog is about the Manila Investor Market Report for May 2020. Hope you enjoy it. So, welcome. In the Manila Property Market Report for Investors in 2020, you'll get much greater detail by reading the written blog. I'm just going to try and cover the major point of detail of the blog in this video blog. Anyway, so first things first, very simply, just to sort of update you, if you had invested in 2015 $100,000, roughly today it's worth $250,000. So the market keeps going, keeps growing. But also the interesting thing about the Manila property market is very diverse, and you can literally buy anything from. You can invest from maybe $80,000 right up to millions of dollars, right? And there's quite a lot of that. Generally, our average sale in Manila is about $400,000. That tends to be the marketplace that we're in, so to speak. As there are many areas which I cover in the written blog, which I won't go into details about, different market segments of where you can invest and where you can't invest. But the general rule of thumb is that Makati City and BGC is the place where 80% of exclusive hot properties investors invest. As I said, you'll see, but we in the written blog we cover all those different other locations for people that have less money and have less of a strategy, have a different strategy in relation to investment. Right. So the fundamental factor that you have to bear in mind in the Manila property market at this moment in time is it's great for capital growth and very bad for yields. So as I've covered in some other blogs, generally speaking, your yield now on a luxury condo is about 3.5% to 4%. In 2015, it would have been about 8%. And the reason for that is property prices have gone up 150%, but rental prices are more or less stayed the same. Hence why we're in a market of capital growth rather than yields. Okay, so there are many different ways to invest in the Manila property market. So I'm going to go through them, and with looking at and we're looking from an expat perspective, not necessarily a Filipino perspective. So the number one and best way, and the majority of most of our investors, are resale properties. So resale property basically means you buy at the best price possible because you're a cash buyer. Generally, if you're an expat and you're on a tourist visa, you cannot borrow money, so you need to be a cash buyer. So being a cash buyer allows you to get the best possible price for your unit, and that's where the real value for money is. And you can buy. So to give you a good example, generally speaking, in BGC or Makati, you can maybe buy a really good condo at between $4,000 and $5,000 a square meter as a resale property. Off plan now on something new, you'd be maybe paying $7,000. So there's a saving to be made in that respect. The second way to invest or buy is what we call a ready for occupancy. And this is basically these are properties that have just been finished in a development, and they're on sale from the developer. They didn't manage to sell all the units out during the development. And the developer will sell those in two sort of ways. He will do what they call buy to let. And this is primarily for Filipino buyers, so I won't spend too much time on that. But generally, you'll pay your rent for a year, and then your rent will be like your deposit. And then after that, bank finance will allow you to buy the unit. However, you don't get any discount. You're paying, the developer sets the price and that's what you pay, and the bank lends the money against it. But as an expat, the bank won't lend to you, so it's really it's just to inform you of what's available. But what's more interesting is that that price will be discounted if you're a cash buyer, which in most cases you will be, and the cash discount you can get is quite considerable, and it differs very much between different developers. So to give you an example, generally speaking, Mega World cash discounts 10%, but with Century Properties you can get up to 35%. But that's a bit of a red herring in the fact that the 35%, their price is high to start with, but it's still, even if you take their price high to start with, it's still a better saving than would you have from Mega World, for example. Okay. The other area to buy leading from this is what we call contract resales, and these are basically people who have invested in condos, and they're coming up to completion, and they want to sell the units and they realize a profit. So generally on the pre-selling side, they've had 30% to 100% growth over a 4-year period, and they can sell at below the developer's price now. But as a buyer, you can buy at that price, at a price that they offer, which is below the developer's price, but it's still a good price for you to buy it, and still a very good investment opportunity. And those are some of the ways that you can invest in the Manila property market. Moving on from there, is the property price boom going to continue? Again, with most of my blogs, I haven't factored COVID-19, but on the basis the Chinese continue, the prices are still going to continue to rise, and it's still going to be a very good property market for growth. As I said, there's much more detail on the blog, and please feel free to go into that in more detail, where we go into areas, we go into other types of investments, we go into the developers, because that's the other thing. You can buy from $1,000 a square meter to $10,000 a square meter, depending on your own investment choice. So I hope you found this introduction to the Manila property market useful. And if you have any questions, please feel free to contact either myself or my team. Shortly after this blog is finished, you will see our information page, which will have our contact information. Thanks ever so much for contacting us. Bye.